I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is November 7th, Tuesday, 2023. So we have another bullish day here. If you're fighting this trend, you're going to be suffering. I've been saying it all week, even last week. You need to understand that this type of catching a top here is not going to happen. They're searching and hunting for liquidity. Very, very obvious. I'll start with showing you what I was mentioning yesterday as a first option. So we retrace back up, retrace back down, and then come up here to wipe out all this liquidity. You got that high, that high, that high, right? Then there's a gap right here that I didn't get to, I didn't show, but the ideas of even coming up to even higher up here will be happening in your head saying, well, how far is this thing going to really go, right? It's going to go up. So that's why I have it showing exactly to wipe out this liquidity. So you take a look here, you'll see that's exactly what we did. So I got it each highlighted, each level. This one happens to be this line right here. I'm going to make this thicker. Let's do it like stupid thick. That is the week high. Well, that's pretty thick. That is the actual week high here on the weekly chart of this October 16. All right. So, well, Sunday the 15th technically, right? But well, no, I'm sorry. That's not really, no, let me rephrase that. That's not, what candle is this? This is, yeah, it is the Monday candle. Yes. So, anyways, that's the Monday high of the week. That week, and we purged that. That's a minimum target as well, right? Because on the weekly chart, what's more important than the daily than the 4 hour? But fine tuned in here, we did go straight to the gap here, and also missed this up candle, this 4 hour up candle by a hair. So now you can see what's going on here. So we opened up, retraced back into that gap that we were already in. And then, and I said yesterday specifically, watch that yesterday's video so it makes sense. I was like, we'll probably retrace back to the open of the week and then bounce off of it, right? And I'm going to go into a smaller time frame so you can see that. But in general, on the daily, they're just looking for that. On the 4 hour, it looks like this. I got these swing highs, all swing highs. And then that one happens to be the week. That week. So yeah, pretty nice. And then now we are we tapped into this candle here, this October 12th, Thursday, the above the open, barely. So that's kind of where the price is, where it was. So smaller time frame, let's go. All right, so price gap down a little bit, little opening gap, and we came down to the open. That's that little purple. It's very thin. I'm going to squinch up from, oh shit, what am I doing? Right here to Sunday opening, the little thin purple line right there. So you see we come to it, we bounce it off of it, and we hit a gap as well. See that top of the gap? Come up, okay, wipe out that liquidity right there, and then we come down, we wipe out that liquidity. We're sitting here in this gap here, not 50% or anything exactly, but whatever, previous price action here as possible support, right? And then price shoots up and is above now of the daily open, right? So anything above here is a bullish day, right? So price comes up, comes down, tests it right there, comes up. All right, now it's 930, right? 930 right here. Wipes out the liquidity on the left side, immediately shoots down for the liquidity here. So I have this little line here, these liquidity line right here, comes and wipes that out, but stays inside that block. See, it didn't go below this block right here. See that? This down candle. This is 820, obviously. This is a 5-minute candle today. We wipe all that out, and it's very common for them to wipe that out, but to then not break lower support. So this candle comes into here. It's testing these down candles like this right here. But this has already came in and bounced up, right? So we generally want to see this candle being held. We don't want to see it get broken. If it gets broken, then it could be a sweep, but I mean, in most cases, that's not a good sign. I mean, obviously, but we're above, and it's not like you're probably like, well, why didn't did you expect to wait to hit the open of the day? I mean, that would have been pretty if it did that and then bounced up too. Don't get me wrong, but it doesn't need to hit the open. We've already tested it here, but this is a higher high and a higher low. We're looking at this as just a higher high and a higher low. If I squinch out a little bit and we look at yesterday's price action, from here to here is a range, and then to retrace back, that's a higher low. So this is a higher low right here, right? So we have that higher low, we have that higher low right there. So when we're coming up here, our understanding is that, oh, yes, we're coming up to take out that liquidity to the left side. We're bullish still, right? This pattern, by the way, didn't pan out. Right? It had become bearish right here when we had a break here and a retrace. This is a fake pattern that they're setting up people to get stuck another time because they're still bullish, right? So you have to understand that possibility, right? But that's a higher low, that's a higher high right there. So when we're at 930, I understand that this is a range and it's a higher high. And we're retracing back down just for a higher low. Not to break through, but to be a higher low. If I put a fib on it, it's probably sitting at a 61 or a 70. I didn't even use it, but just to give you the understanding. Okay, didn't even hit the 61, so but 50 is really what I'm saying. It's fair delivery, right? But again, I'm not using this fib in the analysis, but I'm just trying to give you the idea of the range, right? So under 50% right there, and then on a smaller time frame, this was a buy right here. I have to go to a 1 minute real quick. Before I do, I want to just speak on 5 minutes. Easier to do that here. So as you see, when we retrace back down, so this is the purpose of the buy right here. I don't need to go to a smaller time frame. This is a buy in itself right there, right? You could have pushed buy at 50% of that candle, all right, and then the stop loss is underneath it, right? Which is what you're seeing here. But and I'll leave it at that. Okay, and then price comes up, retraces back into this last down candle. That's another entry right there. On a 1 minute, it's another candle, but you can see how it taps in. Right? Shoots up. What's the goal here when you're here? Higher low to make a what? To make a higher high, right? What's my higher high target? It's not just I'm making a higher high. I'm also looking for a target. Well, I have this gap, but that wasn't important. To me, it was this first green level, which is going to be that swing high that you cannot miss on the 4 hour, right? All right, so there's that level right there. We get to it. Boom. I'm out of the trade. Done. Price retraces back. That was a nice sell too, by the way, but short-lived. Comes right back into this gap right here. So we have this imbalance on the 5 minute right there. You see how it taps into it. All right, 50% of it. I'm not going to even draw it. All right, and then we're also tapping these two down candles. See this candle, and the one next to it down here. This 930 and 935. Well, this price retraces back into it. The open's right there. Right, so I could draw a line for you here though, and you'll see as they intersect. And whoops, what's this all about? Okay, all right. So the imbalance with the two down blocks, 50% of that 5 minute imbalance. Boom, that's an entry right there at 50%. Your stop loss can be down here, but on a smaller time frame, I'm using risk management from a 1 minute and sub-second, so I don't want it to go below or 50% of this. And sure enough, the price starts shooting up and then it holds. So that's the reasoning for this buy here, and the risk management. And where am I taking this? Well, I have an option of this level here, which is the week high. Yes, but up here above that, I have that swing high, which is also was that previous imbalance right there. I have it already highlighted for weeks now in pink. But and I also understand that there's a gap right there. You can't see it. Let me zoom in here. On the 4 hour, it's kind of hard to see it. Let me zoom in, super zoom in. There you go. Right? So um, what do you call it? This gap right here. See this? You can see it. So let me go back to this. So when I'm taking this trade, and notice I mentioned this in a lot of my previous videos, you'll see that these candles, they're not breaking. They don't break the candle, the low of the candle itself. They're constantly bullish, closing and being bullish right after one another. So I have momentum here. When you're in a trade like this and you want to hold your trades, the best thing to do is go to a higher time frame and get out of the noise of a smaller time frame, so you can constantly see this. Like you'll be confident in holding it longer because you can see clear that there's nothing bearish about any of these candles. Even if they dip just a little bit, you notice they don't pass much of the body of the previous candle, right? So anyways, this is to hold it to this target right here, and it does peak up and get into this gap right here, which is, now you can see it on this chart. I can't show you on a 1 minute because it won't even be there. So I'm going to leave it alone here. And this would be a good ringer right here. And this is completely done. Beautiful day and beautiful trades. And then once it comes up here to this gap, it does sweep the high, taking forever. Sweeps the high. This was a nice sell. Where would you take this sell if you took it? I'm not involved though. I'm not trying to be involved past 11 o'clock, period. So, and you'll see that it'll help you out a lot as well. The price does, when it sells from here, look how it comes in and it retests underneath that gap. Look at to the point, and there's a gap in the gap. What's funny? Let me zoom in here. There's a gap in this gap, right? But anyways, not that big of a deal. But on a smaller time frame, like a 1 minute, you'll see some more. You'll see some more precision of it bouncing. But anyways, the point is that it retraces. It hits that beautifully. And this is kind of like a sweep, break, and retrace. This is a nice pattern right here. You could take this sell, obviously, for the liquidity, like right there, and then coming down into here where? Well, on the 15 minute, just to zoom in here, on the 15 minute, you can see that there's a imbalance sitting right there. And obviously on the 1 hour, there's a big imbalance. But if you refine it into the 15 minute of that same hour, you'll see that there's this imbalance right there. And then if you refine it one more time on the 5 minute, it's right here. So if I was to just move this over, then you'll see that as the 5 minute. You see that we tap right into it. So this would be a great place if you were to take this sell from up here or right here. That would be a great place to take profit at. And it's retracing from here to the range. So this was very simply put, if I zoom back out, higher low, higher high, 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 higher low, right? So price retraces back into here, and then shoots up one more time, gets away from that block, that 4 hour up block right there, very short of it, right? I mean, really very short of it. Like we're talking what? We're talking a tick or two, right? A quarter or a half point, pretty much. And then that was the flow. So, beautiful, and outlined even yesterday, not to this detail, obviously, for me to be able to tell you what's happening the day before, I can't really go into this detail, right? So it's not going to really pan out with any price action printing without me knowing what it looks like. So, but take a look here, yeah. And then what I want to say, Dow came up, retraced a little bit more, and then took up yesterday's low, right? And came up right to that gap right there. I have it on my chart. It's already been there. And swept the high of yesterday. So swept the low of yesterday and the high of yesterday, right? It was a small indecisive day anyway. But you see, I was mentioning that we have this remaining piece of an imbalance on the monthly chart, right? You see that? From here, between here and here. See that on the monthly top right? So I just put this here. It's not an imbalance, but I guess you could say it is. It is. It's a monthly imbalance. Yeah, pretty much. And I have it left there. So you can see, doesn't it look like we're heading right for it? So, and if they do, that means they break this range from here to here. And there's a piece of liquidity, obviously sitting right there. That's the high of the monthly imbalance, which is the low, which is the October high, right there. So very clear that they're pretty much rushing for that. And even on the oversold, I'm sorry, overbought, you don't want to be married to these ideas here, these divergences. It's not like you're just waiting. Oh, it came into the overbought. I'm selling. No, I mean, that's not a way to tackle this. You're using it for confluence, but you understand that we have some liquidity here and that they're not going to just sink for you immediately. Just like even when this was bearish up here. I mean, look how it sank all the way down, but you got how many drives up more. Even when it was oversold here, I don't have to explain this, obviously, right? Even when you see it oversold here, you can see that it comes down multiple times, and now up here it's starting to go up. It's going up here on the oversold, but you still have price breaking, right, and still making pretty much lows, right? But anyways, should it be coming soon? I mean, obviously it looks like it should. Look at the dollar here. Not dollar, the daily. I'm sorry, the daily. It does look like it has room up there, right? Because this is a daily chart, and the sold there, you can see. But again, you're not using this. This is not my main ideas. I'm only looking for liquidity and inefficiencies of price. So let's go into real quick. You'll see that we came down. We opened up. Why is the gap not there? That's weird. Let me see. Oh, there was no gap. That's why. So came to take the previous day's low. Okay, and then we get higher high, higher low structure the whole rest of the day since 6:30 in the morning, right? So we're already down here, and we've already wiped out liquidity for Dow. So their interest is only up, which is obviously the highs of the previous highs, all the way from yesterday. And then we had that gap sitting there, and they never went even above that gap. And on a smaller time frame, I'm trying to zoom out. I don't think that's really helpful. I didn't really do the analysis here, so I'm just looking at it for the first time, actually. Well, second time. I did prepare it a little bit, but where the fuck is it? Not a coincidence. So look at this. So this is price action from Monday, September 25th. Or sorry, Tuesday. Really. Tuesday, September 26th. You see that imbalance of price there? And I remember talking about this too then. I was talking about sealing that up a long time ago. And look how we came up to it nicely, and the gap's right above. And then look at the price action. You can see that, right? I'm zooming in all the way to the left here. You see all this price action? Look at that. So, boom. Right there is the up candle, this up candle, and that would seal price right there. And is it the same level? Jesus. Let me use a ray here. Would you look at that? So right there, same level. The low of this candle here is 34,268, which is that up candle, and the high of this candle, 34,268, exact same level. So that's where the price was drawn to, and I'm gonna delete that just so you could have seen that. And they still up price, so pretty nice job. Up, that might be next here. I won't get into that. It's hard to deal with charts that are all the way over there. But so yeah, you're using these ideas. These are higher. That's a higher high. That's a higher low, and then 9:30 shoots the price down. Comes into this imbalance on the 5-minute, and then you didn't hit that block. You could have been an entry at that 50% level, but if that's too much risk, which I don't think so. It's 10 points, not even, what is it? Just balling at 97, and yeah, not even 10 points. But I'll go on a smaller time frame in a second, but it does go inside there, and your goal is to obviously take out previous highs. This is the opening week gap right here for Dow, right here. So you could have targeted right there. Price retraces back into these two down candles, and it has that imbalance right there. See that? This is just a 5-minute. Doesn't break that candle's low right there, right? Would have been cool if it probably tapped right there and then went up, but didn't need to, and then didn't hit the open of this the open of this 5 minute candle either. So didn't hit that. Would have liked to see that, but the strength is shown by it not breaking this candle, this 10 o'clock a.m. candle. See that? That low is still intact of the candle. So beautiful. Buys up. Where does it buy up? Why does it buy up? Well, buys right up to right to that gap. That's already on the chart for me. This is already on the chart. I didn't draw this. I didn't do any of it, and I can't make this up, right? Obviously. So goes right to it. And then what do you have to the left? The previous day's highs, right? Which is yesterday. All right. And on also Friday. Because I don't think they took out. Yeah, they didn't. Yeah, Monday didn't take out Friday's high for Dow. So now we just swept both of that. So that was nice liquidity above. Very suspect as well. So that's another. Let me zoom in so you can see this, because this is super dope. See that right here? See that high and that high? This is Friday and this is Monday. And look, they didn't take out that high. So that's a very big reason to come up back again. And we're not bearish still. We didn't break any structure, especially on Dow. We didn't break any structure too. So and then I mentioned that we came up to that up candle from September, remember? And that's where we ended up, right there. Look at that. So came right to, so high, and then makes another sweep above, and then gets to that level, and then retraces back to that gap. This is the present week gap for Dow. Retraces back, gets into that down candle right there. That's the lowest candle here. And then buys up again from there, and then comes right back to that gap again. So consolidating, bouncing back and forth. If I was to make this in simple terms, buy, sell, buy. Sell, buy, sell, right? So it's a buy, this is a sell, this is a buy, right? However you want to look at it and slice it. We just opened up. But that's how the day panned out. And let's see, what else do I need to mention? Dollar ended up, I gave an example of dollar coming up and then retracing back down. But we did get that today. So we pushed up first and got into this imbalance here. And then I'm not going to draw it out. Actually, I'm going to delete it. Well, I'm not going to delete everything. Just leave it. I'm not curious about it. But and then you see here that we constantly were selling off at the 930, coming down, right? And then we ended up making a new lower low here. So the day turned out, yes, it was bullish here because of all the AM movement, but that was in the beginning pushing us down initially. But and to put it this way, dollar wasn't that helpful. So it's not like I was relying on this either. I'm just going over it. All right. So you have to understand that too. When I mention that, it doesn't mean that I need dollar to pan out for me too. And we know that we're in mixed markets too. So it's like it's not working perfectly. But this is just to give you the idea of all this movement down was pushing us up. So and even though it's a bullish candle, it still came up and then it retraced hard under 50% of its high and low. Right. So whatever. Again, not that helpful. And then, looking at the markets here, they're pretty much in tandem, but you did have a crack here on S&P with a lower low here. And then especially at the 930, buy that we all took, or that was placed. And that was a crack there. Right. So you can see that we have higher lows in NAS and in Dow. So all right, so I think that's what do I need to do? Maybe tell you about tomorrow. I mean, to be honest with you, I don't know, man. Now at this point, do they use this as a resistance, and does it break that high? That's going to be the dangling carrot for me. I don't know. I think they should. Is there FOMC? Let me push pause real quick. All right, so we got Fed Powell talking at 9:15 a.m. on Wednesday. We have a treasury currency report. That's at 4 p.m. No, yeah, that's probably gonna sweep the high, in my opinion. Wait a minute. Today's Tuesday, right? Yeah, I'm tripping. Yeah, what am I talking about? Yeah, tomorrow's Wednesday, 9:15. Powell. That's gonna be interesting. That'll probably push up to sweep those highs. In my opinion, I don't know, obviously. And then we have Thursday unemployment claims, and Friday Right away, we have consumer sentiment. So that being said, well, I'm gonna delete this. I've already explained this, and I mean, should we be start or making our way down? Sure, but I mean, do we bust up and break that up above here? You know, this high right here. I don't know. I don't know if they're gonna take that week out. We're pretty deep up, but the market can do what it wants. So, and then let me type on this question mark. Just gonna leave it like that. I mean, price can retrace back a little bit to kind of get into some of these imbalances here. There's a 4 hour right here. There's one right there on the 4 hour. I like hitting this as support and then bouncing up. So let's do it. Let's see it like this. See if bearish, if it gets weaker, we might hit this gap right here. You know, and then I'm expecting something like this. Let's just say, assuming that, like, you know, we came up here and I have to extend this range right here from this low to high, comes to a 50 or something, you know, kind of bounce off of this previous support, maybe bounce up again. And if you watch my videos, I mentioned some flow like this, right? So I'm coming up and then retracing, wiping out the buyers, some of the buyers, and then bouncing back up to wipe out sellers again, and then have our quarter or Christmas rally, for example. So yeah, I mean, this kind of makes sense here. Why not? Let me go into a smaller time frame. What range are we in technically here? Man, I mean, it's pretty tight, man. I mean, we're already in this range, so you know, maybe it comes back into here only. So I like this, you know, maybe even hitting this gap, but I feel like that's a little too deep for Asia and London to do it, but we might get a lot of action there. I don't know, but it might just bounce from here, like back into this imbalance right here. And then hit this down candle right here. See this down candle in the 15-minute right here? Maybe possibly tap that. I don't know. But there's liquidity sitting there right there, but I'd hate to be Asia or London. But otherwise, if it doesn't, obviously, if it doesn't roll up one more time, then you know I'm definitely bearish. I mean, then I would just want to see it fucking come down. You know what I mean? But there's no reason why we're not coming back to this area, in my opinion. Even if it was to be still bullish, I don't see why we wouldn't come, you know, here, bounce off of here, somewhere in here, and then go up. You know. So but don't fight the trend. You know, just don't fight the trend. It's been bullish, but if I was them, I would just wipe this out and then sink down with a wick like that. You know, big stupid pin bar or something. You know, and then be bearish for the rest of the day because the high of the week. It's possibly that they make the high of the week by London tomorrow, which is Wednesday, by London 3 a.m. So it's possible that they make the high of the week there and then they shoot the shit down the whole rest of the week. So for even Friday. And then they have then turn around and wiped out all these people that were buying. Look at the inefficiency on the weekly right there, which is that high would be right here on the 4 hour. So there's no reason why. That's why I like it bouncing here, coming to here to seal at least on the weekly, because this will be a weekly imbalance technically, right? Which we can get into detail more on the daily down here, but you know, and yes, even I don't know, even you know, if it does come down, we don't know that, but that's why I'm a day trader. Fuck, I don't care. But this was pretty kosher as far as buying up, but you know, I don't know. I'm gonna need some serious pattern, lower low, lower high to be bearish, right? As far as at the moment and tomorrow. So, I hope this helps you guys. Take care until tomorrow. God bless.